Hey, welcome back to YT Finance, and this is the YouTube channel where I went to business school so you didn't have to, and today we are talking about Tesla's TSLA stock and how analysts are increasing their price targets for the TSLA stock. Then we're going to move on and we're going to talk about why Tesla has soared while other automakers are struggling to make cars during the chip shortage. We're also going to touch on how Tesla's full self-driving beta has 3 different types of modes, one of them being assertive. We're also going to dive into how Tesla sold a record over 70,000 vehicles in China, which is a fantastic increase from last year. We're also going to go over how Tesla has signed a recent deal with Talon Metals for US nickel supply, and this is going to be for their batteries, because eventually Tesla wants to make everything that's involved in their car, everything from hardware to software. We're also going to touch on Bitcoin and how a certain Tesla owner has mined around $800 worth of Bitcoin every month through his Tesla car, which is pretty funny. Then we're going to talk about the TSLA stock splitting again, when it's going to be, or how high they are waiting for the stock price to go before they perform another split. Also, what type of split are they going to be performing? Is it going to be another 5-to-1 split that we saw back in August of 2020? Well, stay tuned to find out, and we're going to start off first with the newest price targets by analysts for the TSLA stock, so let's jump right into it. Tesla has recently reversed out of the recent downward trajectory by rising around 3%, mainly based off of analysts' predictions, specifically analysts from Goldman Sachs and another analyst from Morgan Stanley. The Morgan Stanley analyst said that the company is a clear winner in the electric vehicle race, and this is a no-brainer because I think everyone knows that Tesla is an absolutely phenomenal company and that they are a clear leader in this electric vehicle race. However, both analysts have increased their TSLA stock price targets. Tesla's stock price has been quite volatile lately by ranging between the two stock prices of $980 and $1,200, and this is despite Tesla delivering fantastic delivery numbers both in the United States and China. But right now I want to specifically talk about their price forecasts, their price targets, and their price predictions by analysts, and we're going to start off with the Morgan Stanley analyst, who increased his price target from $1,200 to $1,300, and the analyst says that Tesla is on track to reaching this price target by the beginning of 2023. Likewise, the Goldman Sachs analyst also increased his price target from $1,200, but he increased it slightly less to only $1,125 per share. Now, I am very bullish on Tesla, so I tend to agree more with the Morgan Stanley estimate here, but it's nice to see two fantastic institutions and analysts both increasing their TSLA stock price, and I think other institutions and analysts are going to follow suit with this. Other average price targets, according to other institutions, range anywhere between $849 for the TSLA stock and $916. The Morgan Stanley analyst went on to say, and I quote, "Think of the EV race as a marathon. Tesla is in the lead at the mile number 21. Everybody else is at mile 2 or still tying their shoes." And I think this 21 is a reference to the year of 2021 and how Tesla is just a clear dominant leader in this industry, and the analyst tends to agree with that. He also predicts that Tesla's delivery numbers will reach over 2 million for the full year of 2022. Now, to put that into perspective, Tesla only delivered 936,000 vehicles in 2021. The Goldman Sachs analyst places the TSLA stock in an outperform category, so he is very bullish on it, and he thinks that Tesla is one of the best ideas to invest in for the electric vehicle sector, and again, I 100% agree with him. However, the only caveat which both these analysts are aware of is that the adoption rates of electric vehicles, if they slow, it's really gonna hurt Tesla and other electric vehicle manufacturers quite a bit. However, I don't think that's going to happen because governments are really pushing hard the whole green agenda and how electric vehicles are going to somewhat be their saviors. So honestly, if anything, the government is just going to increase the amount of adoption that electric vehicles are going to experience over the next few years, and this is going to be present both in the United States as well as around the world. The Morgan Stanley analyst also says that the opening of the Berlin and Austin plants, referring to Tesla's gigafactories, offers an opportunity to achieve even higher gross margins, which we expect Tesla to eventually reinvest into product, services/network expansion, and price. However, However, Yahoo Finance reports that their average price target for the TSLA stock remains at $894, while other institutions have not budged yet, increasing their price targets from $916. However, another caveat that I want to add is that the TSLA stock and Tesla in general has a gigantic PE ratio, which is known as the price to earnings ratio, of around 345, and that is extremely high. Now, if you don't know what a PE ratio is, don't worry, we have the definitions for a PE ratio over here, but I'm not going to read this definition. You can read it on screen if you would like. I'm just going to say that a high PE ratio basically signifies that a stock could be way overvalued. It measures the stock's earnings to the current share price, and if it's too large, it means investors could be getting ahead of themselves. However, if investors do anticipate that the earnings will track to their price in the future, it just means that they are very excited to invest into a growth stock that is so innovative, such as Tesla. However, if you don't think that Tesla can meet their earnings per share later, or their forward PE ratio, then it might be safe to wait for a pullback before investing. I also want to talk about how Tesla is absolutely dominating other automakers. For instance, GM and Ford have actually closed some of their factories during this computer chip shortage and semiconductor shortage. However, Tesla, on the other hand, is racking in the revenues and their sales overall, and they haven't been very affected by this chip shortage, which we will talk more about later. The effect to reduce emissions are causing climate change activists, including governments, to lean more toward electric vehicles, which I also mentioned. This transition is going to have to be slow to electric vehicles. It can't be so rapid that it's going to hurt the economy. It's going to be a slow, gradual process. However, governments are definitely on top of this, and Tesla specifically is going to gain a lot of customers from this shift. Not to mention that Tesla just generally has superior technology, and it also has a fantastic supply chain compared to other automakers. Just listen to how adaptive Tesla actually is. So when Tesla couldn't locate or get chips because of the chip shortage, they took the chips that they did have and that were available, and they actually reprogrammed and repurposed software to operate and suit their current needs. However, on the other hand, larger auto companies couldn't do that because they actually rely on outside suppliers for their chips. And because Tesla wants everything developed internally within the company, and they also have brilliant engineers and programmers, they could actually do this, which is why Tesla wasn't very affected by this chip shortage, and this is actually where Tesla really got to shine. I also want to point out that Tesla also released 3 different driving modes in one of their recent updates. So Tesla has full self-driving features, and that's in its beta right now, and it lets consumers pick from 3 different driving modes. The 3 modes are chill, average, and assertive. The feature was originally included back in October of 2021 in version 10.3, but it was literally pulled 2 days later. These modes, the chill, average, and assertive, are meant to describe the way the vehicle drives in its full self-driving mode. For instance, if you put the car on assertive, it could do rolling stops, speed-based lane changes, and the following distance between the car in front of you can either be increased or it could decrease. Now, I personally think that the majority of people are always going to put this car in assertive because it's going to get you from point A to point B much faster than the other 2 modes. However, if you're early to work one day, or you think that you're going to be early, you may even put the vehicle in chill mode or average mode because you have time to burn. In the chill mode, the vehicle will have a longer and larger following distance between you and the car in front of you, while the average mode will have a medium following distance, and the assertive mode, you're basically tailgating them in a sense. And this has brought up concerns over safety for these specific modes, because what happens when it's raining outside or if it's snowing? Is assertive mode actually going to be safe in these environments? Next, I want to talk about how Tesla recorded record sales in China, delivering over 70,000 vehicles. The actual number is 70,847 vehicles that were made in December, and this is absolutely phenomenal. This also includes a few exports, such as 245, but that really doesn't skew the overall number. Tesla has been extremely effective and impressive regarding their manufacturing capacity, which I have always said is their #1 advantage. Their superior technology and manufacturing capacity is going to allow them to innovate and take advantage of economies of scale, unlike other electric vehicle companies that we see on the market right now. Right now, I would say their biggest competition over in China would be BYD, but we also have to watch other automakers such as NIO and XPeng. So the Chinese EV automaker NIO, which again, I also own NIO stock. I am a huge NIO fan, but I tend to split my electric vehicles between Tesla, Lucid, Neo, and Xpeng, just to name a few of them. I am a huge EV bull, and China is literally the electric vehicle capital of the world. So if you're going to make money in electric vehicles, you're going to have to invest into some Chinese companies, at least a little bit, and this is also good for diversification. However, if you don't want to, that's totally fine. I just specifically want to highlight Neo, who delivered around 10,489 cars last month, and that would represent a year-over-year increase of around 50%, give or take a few percentage points. Xpeng, on the other hand, delivered 16,000 vehicles, which actually beat Neo's deliveries, which was quite surprising, and this is why I own both Neo and Xpeng. I think Neo is a great electric vehicle company, and it has the backing of the Chinese government. On the other hand, Xpeng, we've seen Kathy Wood of ARK invest into Xpeng and not Neo, so that also should speak volumes. On the other hand, Volkswagen AG also said it sold around 13,000 of its electric vehicles in China in December. I also want to highlight that Tesla has recently signed some agreements with a US-based metals company named Talon Metals, specifically through one of its subsidiaries named Talon Nickel, and they signed a deal with Tesla so that Talon could supply Tesla with nickel concentrate, and this is going to be used for their batteries. The company has said that the agreement can either last up to 6 years or until 75,000 metric tons of nickel concentrate has been produced and delivered to Tesla. Talon also said that both parties, reading from the article here, had also agreed to share in any additional economics derived from byproducts extracted from the nickel concentrate, such as iron and cobalt. Next, I want to talk about this fun Bitcoin story, and that it's a guy that's literally mining cryptocurrencies from his Tesla car. So this is pretty ingenious what he's doing, and basically anyone with a Tesla can do this. It's not like you need blockchain or coding experience to do this. It's quite simple. So basically, he's running a free Bitcoin mining software through an Apple Mac computer, and he is charging the computer so it can run 24/7 through the electric vehicle. This is netting him as much as $800 a month when Bitcoin was at its peak, and I'm guessing right now it's giving him anywhere between $600 to $800. The reason he's doing this is he says that it's actually cheaper to charge his computer and to leave it plugged in 24/7 inside of his Tesla, where he would just have to recharge his Tesla car rather than leave it plugged in his house. And he even says, and I quote, "The main component is the price of the electricity. If it's cheaper doing it through an electric vehicle, then so be it." And honestly, I would say this is a brilliant idea. If your electric vehicle is going to give you cheaper electricity than plugging it in inside of an apartment or your house, you're actually saving a lot of money by doing this, especially if you're mining cryptocurrencies. Now, I wonder if you could do this with something like an ASIC miner instead of a computer, because clearly he's using a GPU through his computer, but I'm sure you could find plenty of other videos on people doing very similar things like this. Lastly, and this is probably the reason why you clicked on the video, let's talk about the Tesla stock split. There has been a video recently released by a Tesla employee that's talking about how Tesla is thinking about splitting their stock. This is speculation right now. We haven't heard anything officially from the company as of right now, but we do have some great indicators, and if a employee of Tesla says this, we should be able to put some amount of weight on this. So right now, I want to briefly talk about the stock split that happened in August of 2020, where Tesla announced a 5-for-1 stock split. They announced the stock split in the month of August, and then it went effective at the end of August. Tesla was trading around $2,230 per TSLA share before the split, and then once the split actually sounded off on August 31st, each TSLA stock was trading at around $446. The stock split was not surprising for many people because Tesla had been increasing their revenues and even more than quadrupled the revenues up to 6 times in the span of 5 years. Their revenues went from around $4 billion all the way up to $24 billion by the end of 2019, which is absolutely amazing. Also, their gross profit increased all the way from $924 million to $4 billion. This invigorated investors to buy up the TSLA stock, and this is why Tesla wanted to do the stock split. Ultimately, the stock split created a perception that Tesla products are accessible for everyday people. So sometimes companies split their stock for people who don't have access to brokerages that have fractional shares like Robinhood. Otherwise, you would need up to $2,200 to invest into one TSLA share if you didn't have access to fractional shares. But by lowering the TSLA stock price, you make it more acceptable for the majority of people, regardless of what brokerage they're using. This also in turn helps the TSLA stock price because with more people investing into the stock, the easier it is for it to rise again. Now, Tesla's stock price right right now is trading at around $1,064 per share, but people are debating about when Tesla is going to do their next stock split. So after scouring the internet, reading multiple articles, multiple rumors and speculations, I have a plethora of different things of how it could go down. So the first article that I read said in August of 2022 is when the stock split's going to be, and it's going to be a 3-for-1 stock split. Now, I personally think this is probably too soon, or I also found another website that said the stock split is going to happen once the TSLA stock price reaches around $2,200, and that's when the stock split is going to happen. And I think this line of logic is more credible because if we look back at the stock split of August in 2020, we can see that the stock price was around $2,200. But we're going to have to wait and find out. Comment your thoughts down below about the potential TSLA stock split. Comment down below when you think the Tesla stock split's going to be, or at what price it could potentially split at. Remember to smash the like button, especially if you made it all the way to the end. Subscribe if you are new, and I will see you in the next YT video.